So what is going on with the Indian rupee? That's the question on everyone's mind right now, as it hits a record low. We're going to break down exactly why this is happening, what kicked it all off, and what the experts are saying might be coming next. Let's get right into it.
First, let's look at the number that's causing all the headlines. The rupee just hit an all-time low of 92.49 against the US dollar. Now, this isn't just a small dip in the market, this is a big deal, a historic moment that signals some serious stress on the Indian economy. But what's causing it? Well, it turns out it's not just one thing.
You see, India's currency is basically caught in the middle of a perfect financial storm right now. It's this powerful mix of global and local pressures, and they're all hitting at the very same time. It's creating this cascade effect that's just dragging the rupee down. So let's break down the three main parts of this storm.
Okay, factor number one is a massive amount of money leaving the country. Foreign institutional investors have been selling off Indian stocks like crazy. Just think about this. In the first 8 trading days of March alone, they pulled out about $5 billion US. When that much foreign cash leaves so quickly, it puts just incredible downward pressure on the rupee.
The second ingredient in this storm? Oil. The price of Brent crude oil has shot back up over that critical $100 a barrel mark. And for India, a country that imports more than 80% of its oil, that hurts. A lot. It means the country has to spend way more US dollars to buy the exact same amount of energy, which, you guessed it, weakens the rupee even more.
And the third factor is just classic market psychology. Whenever there's a big crisis or a lot of uncertainty in the world, investors get nervous. They start pulling their money out of what they see as riskier markets, like India, and they rush to the safety of the US dollar. All that demand for the dollar makes it stronger, which automatically makes other currencies like the rupee weaker.
So we've got the symptoms, right? Money flying out of the country, soaring oil prices, and a super strong dollar. But what's the actual disease? What's the one single event that actually triggered this whole perfect storm in the first place?
And that brings us to the root cause of this whole thing. It really all boils down to a single geopolitical trigger, a growing military conflict in West Asia that has basically shut down the Strait of Hormuz. This one event is the real engine driving this entire crisis.
Now, to really get the scale of this, you have to understand what the Strait of Hormuz actually is. It is one of the most important shipping lanes on the entire planet. A staggering 20% of the world's crude oil, natural gas, and LPG flows through this one tiny channel. So shutting it down, that's a massive shock to the entire global energy system.
And for India, the impact is huge and immediate. Before all this started, look at that. Nearly half, 45% of the country's oil imports came right through that strait. So to suddenly lose access to that single route, yeah, that creates a major economic emergency.
So with a crisis this big, you have to ask, what is India doing about it? Well, both the government and the central bank, the Reserve Bank of India, are jumping in with some pretty big moves to try and calm things down. The government's response has been huge. They've created a 1 lakh crore rupee, that's about $12 billion US, economic stabilization fund. You can basically think of this as a giant financial war chest, right? It's designed to absorb the economic shocks from this crisis, especially the rising costs of things like fertilizer and cooking gas subsidies.
Meanwhile, the Reserve Bank of India is also getting involved. The RBI is stepping into the currency markets pretty aggressively to prevent what it calls excessive volatility. It's also buying up government bonds to keep money flowing. Now, experts say the RBI isn't trying to reverse the rupee's fall completely, but to act more like a speed breaker, to just slow it down and prevent a total free fall.
As you can imagine, a crisis like this has kicked off a pretty intense political debate. On one side, you've got Petroleum Minister Hardeep Puri, who says that India's supply is secure, pointing out that they've managed to get about 70% of their oil from other routes now. But on the other side, opposition leader Rahul Gandhi is warning, the pain has just started. This is only the beginning.
And that brings us to the really critical question. What happens next? With the emergency measures in place, everyone is now looking to the future, and experts are starting to forecast what the risks could be if this situation keeps going.
And to be honest, the analysts' outlook is pretty bearish. Financial firms are modeling out what might happen. MUFG Bank, for instance, is warning that if oil prices stay up around $120 a barrel, the rupee could sink to $97.50. And Quanti Eurico Research has an even gloomier long-term view, suggesting the currency could hit $98.50 by 2027 if these high oil prices just don't go away.
So India is really at a crossroads here. It has put up some major financial defenses to try and ride out this storm, but the global tensions that are causing the storm in the first place, well, they aren't showing any signs of calming down. And that leaves us with one big, lingering question. As all this continues to simmer, just how long can India's economic defenses hold up?
So that's our breakdown of the rupee's record low. It's a really complex situation, and we'd love to know what you think. Please leave your feedback and your thoughts in the comments below. And of course, if you found this useful, don't forget to like, share, and subscribe for more deep dives. Thanks for watching.